Welcome back to Alpha Recap. I'm Jude, and today we're unpacking a busy close, a big chip bounce, a strategic automation launch, and a standards push that could speed hydrogen projects. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Plenty to dig into. From Intel's heavy volume rally to Schneider Electric's new software-defined control platform, and a standards initiative that could actually move capital into hydrogen.
Quick headline recap to set the scene. Schneider Electric unveiled EcoStruxure Foxborough software-defined automation. They're calling it the first open software-defined distributed control system. The American National Standards Institute launched a hydrogen standards coordination initiative with a Phase 1 website and webinars. And Intel finished the day up about 5% on very heavy volume, making it one of the most actively traded names. Jessica, why don't we start with Intel? What did that trading action mean?
Sure. Intel popped about 5% and it traded roughly 111 million shares, which is a lot of liquidity. When a big cap semiconductor moves that much on heavy volume, it does a few things. It creates profits for long holders, forces some quants and momentum funds to reshuffle positions, and can trigger option and hedge rebalancing. In plain English, a move like that changes short-term market mechanics for the whole chip group.
So this wasn't just a neat headline number. It actually changes behavior in the market.
Exactly. Heavy volume is a signal of conviction. It could be buyers stepping in for fundamental reasons, short covering, or both. Traders will be watching tomorrow to see whether price follows through or if this was a one-day squeeze. Also, analyst notes or deal headlines often follow these kinds of moves, so any news flow overnight would be important.
Makes sense. Now, Schneider Electric's launch, EcoStruxure Foxborough SDA, they labeled it a software-defined distributed control system. For listeners who don't live in industrial tech, explain what that is and why investors cared.
A distributed control system, DCS, is the control backbone for big industrial plants, like chemical plants, refineries, and power facilities. Traditionally, it's been hardware-heavy and tightly integrated. A software-defined approach separates the control software from specific hardware, making deployments more flexible and upgradable. If it's genuinely open and secure, it lowers integration costs for customers and makes it easier for Schneider to sell recurring software and services rather than just one-off hardware.
So the pitch is essentially make it easier to upgrade and manage plants, and you convert one-time sales into ongoing revenue.
Yes. Investors have been rewarding that revenue mix across industrials because recurring software revenue is more predictable and higher margin. The practical caveat is adoption timing. New platforms need pilots, partner integrations, and proof that cybersecurity and interoperability actually work in the field.
That's where the standards conversation comes in. The American National Standards Institute launched a hydrogen coordination initiative. Walk us through why standards matter for hydrogen.
Standards reduce uncertainty across technical specs, permitting, and procurement. For big hydrogen projects, electrolysis, compression, storage, uncertainty around standards can stall approvals and increase costs. If ANSI's effort produces clear standards and stakeholder buy-in, it shortens the timelines for permitting and procurement, which in turn makes projects more investable. That's a multi-year positive for equipment suppliers, engineering firms, utilities, and automation providers who sell control systems to these projects.
So Schneider's software-defined system and ANSI's standards push are actually connected in a pretty practical way.
They are. If regulators and industry adopt consistent standards, project developers will demand control systems that are compliant and easy to integrate. Companies that move quickly to support those standards with openness, embedded cybersecurity, and real-time intelligence could win larger shares of these builds.
Jessica, you mentioned embedded cybersecurity. Why is that important here?
Operational technology, the stuff that runs industrial plants, is increasingly targeted by cyber threats. Embedding cybersecurity reduces the risk of costly breaches and can be a deciding factor for buyers. For standards-driven projects, proving security compliance is often required for permitting and insurance, so it's a real commercial advantage.
Let's pivot to some of the other themes in today's digest. Zoth raised a strategic round for a privacy-first stablecoin neobank. What's the market signal there?
It signals continued investor appetite for crypto-native fintech, especially products that emphasize privacy. The details weren't disclosed, so this is more validation than valuation clarity. The bigger point is capital is still flowing, but teams need to navigate regulatory uncertainty to turn that into real scaled businesses.
We also had a consumer angle. The Toy Association put out trends for 2026, and Google Trends spiked for a potential sale of Bob Evans. How should traders treat those kinds of signals?
Industry briefings and search spikes are early warning indicators. They're directional, not definitive. For toy makers like Mattel and Hasbro, the association's trends matter because they can affect retail inventory and seasonality assumptions. A spike in searches for Bob Evans suggests market attention, but until there's an official filing or press release, it's noise you shouldn't trade on alone.
On insider activity, Sierra Bancorp reported a director sale of about $189,665, and Procter & Gamble filed a Form 144 indicating potential restricted share sales. Is this unusual?
Not really. Modest insider sales and Form 144 filings happen regularly. They become important only if follow-up filings show large sales or coordinated activity. For now, they're flags to watch, not alarms.
Okay, you laid out a few thematic roundups in the memo: industrial modernization and standards, chip momentum, energy transition funding, consumer signals, insider filings, and operational updates. Any one of these you'd call the main thesis for investors looking at the next year?
The dominant theme is convergence of standards and software. When technical standards and open, software-first products come together, procurement gets smoother, revenue streams lengthen, and margins can improve. Intel's rally and the chip narrative support the infrastructure build-out, data centers, electrification, automation, which feeds back into demand for industrial control and power management. So standards plus software supported by chip-led infrastructure demand is the core multi-year theme.
Let's give listeners some concrete things to watch tomorrow and over the next few days.
Sure. For Schneider Electric, watch for customer pilot announcements, partner integrations, or analyst commentary that tie the product to revenue timelines. For ANSI, check the Phase 1 webinars and attendee lists. If big OEMs or government agencies are on those calls, that's meaningful. For Intel, look at follow-through trading, volume, and any headlines that explain the move. For Zoth, detail on funding size or regulatory filings. And for Sierra Bancorp and Procter & Gamble, watch for Form 4 filings that disclose share counts and prices.
A quick practical question on Intel. If you were trading around that stock after a move like this, what patterns would you look for to decide whether to stay long or take profits?
I'd watch whether the stock held above today's close on continued volume. If volume dropped off and price stalled, that suggests profit-taking. If volume stayed higher than average and price continued up, that suggests buyers remained in control. Also look for news catalysts, supply deals, analyst upgrades, or commentary from management, because those can justify continuation beyond technicals.
Before we wrap, let's run through the quick hits, the rapid-fire list you gave in the notes, just to make sure listeners have the checklist.
Right. Schneider Electric launched EcoStruxure Foxborough SDA. Watch for pilots. ANSI launched the Hydrogen Standards Coordination Initiative. Phase 1 website and webinars live. Intel was up about 5% to roughly $50.60 on about 111 million shares. Zoth raised a strategic round for a privacy-first stablecoin neobank. Terms undisclosed. Sierra Bancorp had a director sale reported at about $189,665. Procter & Gamble filed a Form 144 signaling potential restricted share sales. The Toy Association hosted trend briefings that matter to Mattel and Hasbro, and Google Trends showed a spike in searches around a possible Bob Evans sale. Verify before acting.
Nice and tidy. Let's finish with 3 clear takeaways listeners can remember from today.
1. Convergence matters. When standards and software align, industrial suppliers can turn projects into recurring revenue. 2. Volume-driven moves in big semiconductor names can change short-term market structure and influence multiple sectors tied to infrastructure. 3. Early signals, standards webinars, pilot announcements, and SEC filings will separate real trends from noise, so watch those catalysts closely.
Perfect. Thanks, Jessica. That wraps up today's recap. If you want the write-up or charts, they're on stockalpha.ai. And if you have questions about anything we covered today, head to stockalpha.ai where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. I'm Jude. Thanks for listening to Alpha Recap. We'll see you tomorrow after the close.